Welcome to the tutorial on management accounting. Today the chapter is target costing. Target costing decision is connected with the product pricing. Before discussing the target costing, we need to know what is the traditional approaches to pricing. Under the traditional approaches to pricing, business calculate the cost of manufacturing and selling a product, then add markup to give the profit element. In traditional approaches, we determine the price by adding all the cost, then we add the markup, the profit or margin with the cost to determine the pricing. That means the traditional approach of pricing is known as cost plus pricing. We add the profit with the cost to determine the price. But there is a criticism of cost plus pricing, because cost plus pricing techniques don't consider any external factors such as demand for product, number of competitors. In traditional approaches, we determine the price of a product on the basis of adding the margin or markup or profit with the total cost. That's why the traditional approach of pricing is known as cost plus pricing. What is target costing? In target costing, we set a target cost by subtracting a desired profit margin from a target selling. In target costing approach, in the first stage we determine the target selling price. Then from that target selling price we subtract or deduct the desired or expected profit to get the target cost. And what is target cost? Target cost is the cost at which a product must be produced and sold for achieving the required profit at the target selling price. In target costing approach, we find out the target cost, and target cost is the cost at which we should produce our product so that we can achieve our target profit at the target selling price. That means the main purpose of target costing is to find ways of closing this target cost gap. What is target cost gap? Suppose there may be a estimated production cost and you will determine the target cost. If there is a gap, you can take necessary measures to reduce the gap so that you can produce the product within the target cost to achieve the required profit at the target selling price. That means target costing is the process of determining the maximum allowable cost for a new product and then developing a prototype or a design of that product so that that product can be profitably made for that maximum target cost figure. How to determine target cost? We can see the formula is we need to deduct the desired profit from the anticipated selling price. I am repeating, whenever we subtract or deduct the desired profit from the anticipated selling price, we get the target cost. And to achieve the target cost, we need to redesign the production process of our product or service so that we can remove the unnecessary cost. If we can remove the unnecessary cost from the production process of our product or service, then we can achieve the target cost, and with that target cost we can achieve our required profit by selling the product at the market price or selling price. And for removing the unnecessary cost, we need to do functional analysis, such as we can focus on reducing cost by amending features of a product. That means functional analysis can be applied at the design stage of a new product, and a target cost for each function can be set. I mean, if we can calculate the target cost, then to achieve the target cost for that product we can redesign the production process so that we can minimize the unnecessary cost. And for that removal of unnecessary cost, we need to do the functional analysis for reducing cost by amending features of the product. Here you will get a clear idea about the traditional approach of pricing and target costing. We can see traditionally we determine the cost of production, then in the second stage we add the profit with the cost to get the selling price. This is a traditional approach. I am repeating, we calculate all the cost, then we add the profit or margin or markup with the cost to determine the selling price. On the other hand, in target costing, we first collect the information from the market analysis about the prospective selling price, and from that selling price we deduct the margin or markup or required profit to get the target cost. I am repeating, in target costing system, first of all we try to know the selling price from the market by doing the market analysis. After determining the selling price, we deduct the margin or profit or markup from the selling price to get the target cost. This is the cost at which we should produce our product so that we can achieve our required profit at the available selling price. So what are the reasons for using the target costing? Because the first reason is that we cannot control the market price or the selling price of a product, and another reason is that we can only reduce the production cost of a product at the design stage. I mean, after producing the product we cannot reduce the production cost of that product. If we are interested to reduce the production cost, we need to do it at the design stage. From the previous slide we have seen that in our target costing, first of all we try to know the selling price because it cannot be controlled. That's why we try to understand what is the available selling price. Then we deduct the markup or profit or margin to know the target cost, and after knowing the target cost we will redesign our production process. That means in target costing we have a opportunity to redesign the production process to achieve the target cost for that product. But in case of traditional system, after producing the product, if you add your markup or profit, then if you think that your selling price is higher than the market selling price, then the prospective customer will not purchase your product on a higher selling price, because if you don't know what should be the target cost, then you will produce your product on the basis of as usual cost. Then after adding the markup, if you see that the selling price of your product is higher than the available market price, then you will face problem to sell the product to the prospective customer. That's why we need to use the target costing, because we cannot control the market price of a product, as well as if you know the target cost, then before producing the product you can redesign your production process so that you can reduce the production cost to achieve the target cost. If you can achieve the target cost, then you can achieve the selling price by which you can achieve required profit for your company. What is the implementation process of target costing? I mean, if we are interested to implement a target costing system, then there are some steps. The first one is we need to define product specification and estimate sales volume. I mean, we need to know how much we can sell. Then we need to set a target selling price at which the company will be able to achieve the desired market share. I mean, if you want to capture the market share, what price can be accepted by the prospective customer? That target selling price should be set or determined before producing the product. And whenever you know the target selling price, now you can estimate required profit based on the profit margin or return on investment. Then you need to calculate the target cost. What is the formula of calculating the target cost? We can see we need to deduct the target profit or required profit from the target selling price to get the target cost. And after calculating the target cost, we need to prepare an estimated cost for the product based on the product specification and current cost levels. After that, we need to calculate the target cost gap. What is target cost gap? We can see if we deduct the target cost from the estimated product cost, in the step E we will calculate the estimated cost, and in the step D we will calculate the target cost. If we deduct the target cost from the estimated product cost, we will get cost gap. And our last step is to make efforts to close the cost gap. I mean, if your estimated production cost is higher than the target cost, in that case there will be a cost gap, and as a manager you should take measures to close the cost gap. The purpose of closing this cost gap is to design out cost before production starts. So these are the steps which should be followed to implement a target costing system. For your easy understanding, there is an illustration or example from which you will get clear idea about the target cost and cost gap. However, we can see the example is a Great Games. It's a company name. This company is a manufacturer of computer games. This company is in the process of introducing a new game to the market. I mean, here the company name is Great Games and they produce computer games, and recently they are going to introduce a new game to the market, and this company has undertaken market research to find out about customers' views on the value of the product, as well as to obtain a comparison with competitors' products. The results of this research have been used to establish a target selling price of $60. I mean, after doing a market research, the company has found that the target selling price should be $60 for that computer games. This is the price that the company thinks it will have to sell the product at to achieve the required sales volume. After that, we can see cost estimates have been prepared based on the proposed product specification. I mean, to produce the game, there is a estimation of cost. This is the estimated product cost. There are two types of cost: manufacturing cost and non-manufacturing cost. Among the manufacturing cost, there are direct material $3.21, direct labor $24.3, direct machinery cost $1.12, ordering and receiving cost $0.23, quality assurance cost $4.60, and the non-manufacturing cost are marketing cost $8.15, distribution cost 3.25, after sales service 1.3. These are the estimated cost for producing that product, I mean the computer games. However, the target profit margin for the game is 30% of the target selling price. I mean they are interested to keep 30% profit of the selling price. Here the selling price is $60. And what is the requirement? You can see we need to calculate the target cost of the new game, as well as we need to determine the target cost gap. So here we can see the solution. We are already aware that the formula of determining the target cost is that we need to deduct the desired profit from the anticipated selling price. In our problem, our desired profit is 30% of the $60 and our selling price is 60. So what would be the target cost? Our selling price is 60 and our target profit margin is 30% of selling price. Here the selling price is 60. So target profit margin is 18. So if we deduct the target profit margin, I mean 18, from the target selling price, I mean 60, the target cost is 42. I mean if we are interested to achieve 30% profit, then our target cost should be 42. But from the estimated cost, we can see these are the cost, and the total cost, I mean the total estimated or projected cost for producing that product is 45.89. This is the estimated projected cost, but we can see it is higher than the target cost. What is the amount? We can see the projected cost exceeds the target cost by 3.89. How can we calculate this amount? We can see to calculate the cost gap, we need to deduct the target cost from the estimated project cost. Here our target cost is 42 and our estimated project cost, this is the estimated production cost of that product. What is the amount? After adding all the amounts, we can see these are the amounts. After adding all the amounts, we can see our estimated production cost is 45.89. If we deduct the target cost from the estimated production cost, then our cost gap is 3.89. I mean there is a gap for achieving the target cost. If we fail to achieve the target cost, then we will not achieve the 30% profit on the available market price, which is 60. That's why as a manager we have the responsibility to minimize or to reduce this cost gap. We can see Great Games, it is the company name. Great Games will therefore have to investigate ways to reduce the cost. I mean 3.89 is the cost gap, and as a manager you need to find out ways, or you need to redesign the production process so that you can reduce any of the cost or the minimum amount of 3.89 from this total 45.89, so that you can achieve the target cost. Again I am repeating here, Great Games, I mean the company, will therefore have to investigate ways to reduce the cost from the current estimated amount down to the target cost. I mean if we are interested to achieve 30% profit on the available market or sale price, then our target cost should be 42. But we can see our estimated production cost is 45.89. That means we are not achieving the target cost. That's why there is a cost gap, and as a manager we need to redesign our production process so that we can minimize this 3.89 from any one of these costs, so that we can achieve the target cost. If there is a cost gap, then what is the process of closing that cost gap? I mean that target cost gap. To closing the target cost gap, we cannot increase the selling price. Rather, we should do value analysis. What is value analysis? Value analysis involves examining the factors which affect the cost of a product or service, so as to devise ways of achieving the intended purpose most economically at the required standards of quality and reliability. I mean, to reduce the target cost gap, we need to do value analysis. And value analysis means examining the factors for which the cost occurs for producing the product. But whenever we need to reduce the cost, we should not compromise the quality. If we compromise with the quality of the product, then our product will not be reliable. Value analysis seeks to refine the design of the product to reduce unit cost. Value analysis also attempts to maintain or enhance the esteemed value of a product at the lowest cost. We will analyze value of the product so that we can reduce the product without compromising with the quality or reliability of our product. The main aim of closing the target cost gap is to reduce cost without compromising other aspects of value. Other aspects means quality product and reliable product. Management can set benchmarks for improvement towards the target cost by improving the production technologies and processes. There are various techniques to improve the production process. For the purpose of reducing cost, we can reduce the number of components. We can use cheaper stuff, but we should be careful that whenever we are using cheaper stuff, that cheaper stuff should not affect the quality of the product. That should be considered while using the cheaper stuff. We can use standard components wherever possible to reduce the cost, because if we use the standard material, then our waste will be reduced, from which we can reduce the production cost. As well as we can acquire new and more efficient technology for producing the product. We can ensure training staff in more efficient techniques. We can ensure cutting out non-value added activities, as well as we can use different materials, and for that purpose you can do activity analysis. However, these are the ways we can utilize for reducing the cost to achieve the target cost. If there is a target cost gap, we need to investigate ways. We can see these are the ways by which we can reduce the cost to achieve the target cost. That's why target costing is an important issue to achieve the required profit at the available selling price. Thank you.